Thanks for tuning into the All Funds Network podcast. My name is Mike Schroeder, and today we're here with Matt Cooperman from Skilltree. Matt, thanks for joining us, man.
Hey, Mike, really glad to be here today.
Excited to have you on the podcast. Let's start off with maybe just talk about your background and how Skilltree came about. How you put the pieces together and how you started, and we'll get into where we're at today and specifically what you guys do.
Yeah, so we started in a completely different direction than where we ended up today. We actually started as a staffing agency. So we were originally called Skilltree Staffing. And the thesis was, this was back in 2022, is that there was a lot of VC capital going into crypto. Coinbase was hiring, the MetaMask and that company was like hiring a ton of people. And we thought, man, like there's all these good high paying jobs going to college grads, like for Solidity engineers and developers, like $200,000 salaries. We think that we can get in early and catch this wave and be like the premier staffing agency in the crypto industry. This is the beginning of 2022. So we set up shop, and then we had the Terra Luna collapse, and then the Three Arrows incident, and then the FTX was like the cherry on top. And then we looked around, and all of our clients were going under. Everyone we placed was getting fired, and business was not looking too promising. But we did have a couple prop shops in New York City that were looking for traders, like crypto portfolio managers, to come in-house and manage some of their capital with really decent compensations. So we decided to go all in on that. And at this point, it's really the only thing that was hiring at this point in time in the market. And we made several placements there. And then we started building out that portfolio. And we realized that, once we had, a dozen or so traders in our network, we came to the understanding most of them wanted capital to trade for their own strategies versus like going in-house and taking a job. So we decided to see if we can just raise capital for them, because that's just what we had. We pivoted to what the market was telling us to do. We found one investor, and then we found another, and then eventually the investor mandates were diverse, so our search broadened a little bit, and we just kept feeding that machine over and over again until you fast forward to today. We've made hundreds of capital allocations through our investor network to the traders that we work with. We did over $200 million last year in allocations to traders, mostly through SMA, which is separately managed accounts. So it's really overtaken the recruitment business, which we still have. But this has definitely been like the main thing.
Okay, that's really cool. So you started as a recruiting company, you're still a recruiting company, but then the big pivot was to really capital allocation, or cap intro, if you will.
Yeah, 100%. Look, we just adapted, and I think what we found is that coming from a recruiting background, we had a pretty unique perspective on how to raise capital for hedge funds and traders in the space. I think what we found and learned is that most investor professionals, they look for like the top 2 or 3 funds that they can find, and they try to raise capital just for those 2 or 3 entities, and just go out to the market and say, hey, here's the 2 or 3 best that I know. Where the recruiting model is like to find the 200 or 300 best, and through that build like the network effect, and then you always know who's buying, who's selling. In this case, we're talking strategies, so who the investors are, who the traders are. So like through that methodology, we work with probably 500 crypto hedge funds globally. So we have no territory restrictions. Obviously, we're not like dealing with some countries that are on restricted lists, but we're able to service any investor anywhere and help any trader anywhere get capital allocated to their strategies.
Yeah, very cool. So how I guess off that base, how do you you guys are already working with like the traders, they're looking for the capital. Yeah. How do you guys kind of build that network? So getting the traders, it's kind of a chicken and egg problem. You got to get the traders, you got to get the allocators. How'd you go about building network over the last couple of years?
It's a little bit of secret sauce. I think that we took the playbook from our old recruitment agency. So me, Jack, and David, we actually all worked together at the same agency, and they had a really interesting formula for building out like networks, so that you always have supply and demand when it comes to these types of like services or products. So we try to just find and identify as many traders as we could. This is LinkedIn, websites, crawling, going to conferences, going to events, getting referrals and networks. And then like through them, you just ask questions, you learn, you find out, where different people like get their sources of capital from, and then who they invest in. And it just becomes, once you hit a point of like critical mass, I mean, I'm meeting probably 5 or 6 new strategies a week right now. And, we're probably adding we had 40, I think, different investor inquiries this month. So it just eventually hits like a critical point and it starts feeding itself through referrals.
Let's talk to us about just kind of the way a broker dealer operates.
So let's say you're a trader, you're starting your fund. You designed this great strategy, you back tested it, you've deployed your own capital, you've hit up all your friends and family, and now you're managing capital for other people and you're doing this professionally. And now you want to go out and raise more capital, but the rigors of running a systematic trading strategy, whether this is in crypto or any asset, or I guess I would assume relatively time consuming. And also the skills don't always overlap with, going out and talking to people and raising capital and, generating profit off of arbitrage strategies. So you would probably reach out to a broker like myself about raising capital. We would meet, we go over the strategy. I love to sit down and learn as much as I can about it, get a good understanding of how their specific strategy or their suite of strategies fits within what our investors are looking for. And then afterwards, we would just sign an agreement, and typically we're compensated, a percentage of fees. So however much capital we're able to raise for that strategy, if we raise them $10 million, we're not compensated on the $10 million that we raise them, but rather on the profit that those $10 million generate. So we're in it with them. So we only win if they win.
Yeah. Okay. Very interesting. So you guys take a portion of the profit. So it's, it sounds like the interests are aligned from that front.
Very much so. So the industry standards, 20% of fees. So what we typically do is, again, like we're working with as many investors as we can and as many funds as we can. To the investors, it's a good deal because it's all encapsulated with the fee for the trader. So it makes it really frictionless to work with us as far as like seeing strategies from us, and they know who we are. We know them very well. We know what their risk appetites are, what their preferences are, what they've done in the past, what they're looking to do next. A lot of times we know the investors better than they know themselves. They might say, this is the narrow scope of strategies we're willing to look at, but we might, because we understand them, we might be able to push and say, hey, you know what, this is something that's a little bit to the left or a little bit of the right to what you typically like to do. And I think you guys would like speaking with them. And that typically gets like the ball rolling. So because we almost act like a filter to the investors, it gives us a lot of access and it makes our jobs a lot easier in getting strategies introduced to people who might invest into them.
What type of funds are best suited for cap intro? And that could be size, geography, any I'll keep it general. Anything you have in mind on that front?
Yeah. So we specialize in digital assets. So we're only working with crypto trading funds. And, specifically, we've had the most traction with the systematic quantitative trading funds. The ones that we typically have the best relationship with, where, we're able to raise a lot of capital for them and they're happy with like the services that we provide, are probably, in the $0 to $50 million neighborhood in assets under management. they have a track record. They are, if they come from like institutional backgrounds, that's going to make things a lot easier. Not to say there aren't degens in their grandmother's basement in some small town in Romania that are absolutely crushing it. And, those are people we work with as well. And in fact, some of the best traders we work with, operate that way. But, investors really like to have just in crypto, there's so many other risk factors. So if they can reduce the risk factor of who the trader is, and, if they came from a 2 Sigma or a Millennium, that adds a significant amount of confidence. It makes it a lot easier to deploy capital with them.
Yeah, for sure. So established teams, pretty much, I guess, on the emerging to, smaller size managers. And with the, in terms of when it comes to like the investors looking at these funds, what does the due diligence process kind of look like?
It's evolving a little bit actually as we speak. Typically, there's a challenge in that's specific to crypto trading is you're dealing with a global market and there really is no standardization. A portfolio manager in Hong Kong is reporting their numbers differently than the trading team in Buenos Aires, and they're calculating Sharp differently. They're calculating returns before fees or after fees. They might have a data room, they might not have a data room. So, it's a lot for an investor to try and like filter it down to like, okay, who are the real players? And for us, we don't really have all the information. We only have exactly like what the manager gives us. So we do our best to, consume everything that they have. We have our own template. We, filter down the data into performance. We get a good understanding of how it fits in the profile. If we think it matches with one of our investors, we'll introduce them. One of the first questions I'll ask is who else is invested in them. If they're, again, this is like almost like due diligence by like network effect. If they know that A, B, and C are deployed capital into them, that's going to give them a lot of confidence. So that's also like a chicken and egg problem. One of the things that we're, because it's all self-reported data. And so the way it typically works is an investor will sit, they'll meet with them, they'll vet them themselves, they'll look at the daily performance, they'll look at the back test, they'll deploy a small amount of capital as a test, let that sit for a month or two. And if that capital is doing, and doesn't necessarily have to like make money, lose money, if it's doing what the trader said it's going to do, and that's going to give the investor a ton of confidence that this person is legitimate. And then from there, they'll start scaling the size of the allocation up. One of the things we're doing is we partnered with a technology company. I don't know if you're familiar with Genie AI, Federico up in Boston at all.
No, I can't say I am.
All right. Well, I'm giving him a free plug right now. So
yeah, let's hear it.
So him and his team have a really robust platform that several of our investors use that, they'll take a strategy, they can validate the performance on the blockchain, recalculate the numbers, rip the whole thing apart, dissect it, build it back together and say, okay, like it matches what they say it is. This is something that we've been working with them on for a little bit. And we think that level of third-party validation, which is absent in crypto, is going to be a potential game changer in getting these strategies to investors and building that confidence with investors and getting more capital from those investors at a faster clip.
Yeah, that's great. So you guys could kind of help the investors streamline, at least partial the due diligence, and then from there they know they're at least getting something of quality.
Yeah, I mean we probably work with over 200 investors currently in the crypto space, and they all come back with generally similar questions. So we've distilled those questions down into like a simple one sheet form that, every time we onboard a new strategy, we have them fill that form out. And then our investors, when they see that form, it really helps speed that process up. It's going to answer all the questions that they have about the strategy for the most part. And then obviously they'll
Yeah.
meet with them and be able to do a deep dive.
Cool. There's also on the fund side of things, there's a couple different funds you guys work with. So you mentioned obviously quantitative strategies.
Mhm.
You mentioned SMAs as well. But kind of before we go into the individuals, kind of give us the full kind of scope of the different funds that you guys are working with.
So, we really like to have a huge variety. We like to, when we meet with an investor, they say, hey, show us like who are the best strategies. And like, it really depends on, your risk appetite, what you like to see. We like to say we have like every flavor in the ice cream shop.
Yeah.
So, um, so there's SMA is really popular in crypto if you're familiar with it.
Yes, there's
Tip,
separately managed accounts.
Separately managed account. So typically in traditional finance, when you invest into a hedge fund, you meet the hedge fund manager, they give a great presentation, you get really excited about them, they're going to make you money. You write a check and you give them that check, they manage it. And every month you get a report. And then every quarter or every year, you get returns, and then you're locked up in that fund for however long their terms are. Let's say it's like, 1 or 2 years. And
Mm-hmm.
in the SMA, it's got several unique advantages. You got control, transparency, and liquidity.
Mm-hmm.
When I say control, you don't have to give your money to the hedge fund. You actually maintain control of the assets yourself. And the trading professional is sending trading signals to your account, and that either is trading on a centralized exchange or DeFi or through the prime broker, however you have it set up. But you have custody of all the assets.
Mm-hmm.
So you get to see every single transaction that happens. You can turn it on, turn it off. You don't have to just wait for like a monthly report. If there's some macro event that's happening in a faraway land at 2 a.m., you don't have to get on the phone and call the hedge fund manager and hope he answers the phone to take the to close positions. You can go ahead and do that yourself.
So giving them access to your account essentially.
Yeah, exactly. And it's a separate, like in the name, it's a separately managed account. So they're going to have their own specific account just for that trader. So the way a lot of investors like to participate in the space is they might set up a dozen separately managed accounts and, create a diversified portfolio of external portfolio managers. And each portfolio manager will trade that account.
Got it.
Their own respective ones.
Okay, so you got SMAs, and then talk to us about some of the other strategies you're seeing. Obviously, there's like market neutral funds. There's, I assume, just like long bias, short bias, but kind of give us the full scope.
So there's a huge plethora of strategies out there. And what's interesting in crypto, and I imagine this is true in like all markets, but crypto specifically, is that the market shifts so often. What worked in the beginning of this year may not be working now. It's just like a whole new era in crypto. And so that's why when you see these strategies that have been alive for like 3 years, 4 years, they're likely running a new variation of their original strategy, just because, what worked in 2021 is just not going to work today and generate profit.
Yeah. Alpha decay over time.
Absolutely. So when it comes to like market neutral strategies, directional strategies, there's arbitrage strategies. There's so many different things out there that you can do to generate alpha. I think if you were to start today, the key thing to keep in mind is that the space is getting smaller and more crowded. So you're going to want to do a strategy that's probably differentiated from the market, that has beta between you and the other portfolio managers. So, for example, like basis trading strategies, funding rate arb strategies, these are strategies that have historically been, great performance with very low risk. It's getting squeezed very hard right now in the current market. And, there's like 50 people doing it. So if you're, building one of these strategies at home, you better be the best one out there out of the 50, because it's going to be a very hard time raising capital. But if you did like a cross exchange strategy that used social sentiment data that came in from Twitter, and like you had consistent like returns, like that's something that would be unique, and a lot of investors would find a spot for you in their portfolio, that diversified portfolio we were talking about earlier.
Yeah. Okay. Very cool. When it comes to the investor side of things, talk to us about the landscape of investors you guys work with.
So the investors we work with that participate in this niche product tend to be very sophisticated. They own crypto, they own Bitcoin, and they're now looking for the alpha of the inefficiencies in the crypto market. So this could be high net worth individuals who are Bitcoin maximalists, to institutions, banks, and like just multi fund managers. So what we find to be like the most common like clients out there are people who run, maybe 20, 30, separately managed accounts, and, for a plethora of external managers, and they're managing it like a baseball team, and just making sure that they have like a very diversified approach to like crypto trading on the market.
Got it. So definitely more sophisticated. When it comes to these investors, how from what insights you have, how much do they typically allocate to the crypto space? And I'm not saying like these specific strategies, but as a general term.
So I think the general expectation, and it's growing, which is great. But the general expectation is that the initial test allocation we talked about earlier is probably going to be in the neighborhood of $100,000 to $1 million. Mm-hmm. And, they'll let that sit for like a month or two. And if the strategy is legitimately performing, we expect an allocation to get to, from 1 million to 5 million pretty quickly. I think the largest allocation we've done in SMA for a single account was $30 million from one investor to one trader.
How much of these investors' portfolios are they typically investing? If they had $1 billion, are they typically putting $500 million into crypto, or is it more like 10%?
All right, good question. If they're a high net worth individual or a family office, this is probably a big portion of their portfolio. If they are a major institution, then this is probably going to be 5%. So if this is like an international trading operation with 100 teams in FX assets and in trading U.S. equities, they'll probably deploy about 5% into crypto.
Definitely, yeah. When it comes to crypto funds, give us the picture of flows into crypto funds over time. Has it what have you guys seen over the years? I'm assuming 2022 was pretty slow, but I assume it's maybe picking up a little bit now. Kind of what have you seen over time?
Yeah. So in 2022, we were just growing and getting started. And I also think this business was it was a very good time to join this business because, that's when a lot of players were starting to enter the space from traditional finance as well. And, the FTX crash weeded a lot of people out. It has grown over time. I think, like I said, we had 40 requests this past month. That was the most we ever had. There is more appetite for alpha today than any time we've ever seen from investors. So there's a lot of money out there chasing good performance. On the flip side, performance in 2025 has been a real struggle. I think a lot of managers who did well, last year in 2024, and then had a huge bump, when Bitcoin rose. I think it was like on the ETF play and able to like capture some of that momentum, generated some significant returns. And then, beginning of the year, a lot of investors were still chasing that. They were looking for momentum strategies. They were looking for, we didn't care what the drawdown was, as long as the strategy could do like 60% plus in a year. Like that was like exciting to them. I would say if you fast forward to now, because of like some steep drawdowns in March and February, and even like in May and in April, there's been definitely a compression when it comes to like risk appetite. So typically we're going to see drawdown requests like between 2 to 10% now for crypto trading strategies, and that's just where the market is today. So the appetite of the dollars available, all-time high, but the scope of what they're willing to invest into is tightening. And it's not necessarily just because the markets, like investors, are more sophisticated today than they were last year. That's just the nature of what's surviving and adapting to the current market conditions.
Makes sense. And it's actually kind of a perfect segue into my next question. What type of strategies are investors excited about today?
So, like I said, today with the current market conditions, we have a really unique seat that I don't think anyone else in the space has. We're able to get in real time what investors are looking for and where they're deploying capital. We have like this mile wide, inch deep view of where the dollars are chasing. So like I said earlier, I think today we're seeing a consolidation of risk. So, keeping those drawdowns below 10%, market neutral trading strategies. And then I would say on top of that is just really differentiating strategies to make sure that you're standing out from the field of managers in the space. So this could be social sentiment strategies that use like social data. This could be cross exchange trading strategies that are doing arbitrage between multiple exchanges. This could be something DeFi related on like Hyperliquid, or that's like relatively new. We've seen a lot of requests from investors for those types of strategies as well. So if you're able to adapt with the changing market and still generate returns, that's always going to be a really interesting sign from investors. And if you're up this year to date, if you had a positive Q1 and generated profits in Q1, you generated profits again in Q2. I'm going to say the majority of the field has not been able to achieve that. So if you're able to, that's something I would definitely be telling potential investors because that's something that's going to help you stand out.
Yeah, good stuff. What changes do you see coming in terms of trading in the cryptocurrency space?
So the market's always changing. I would say right now, like I said, we're internally putting extra emphasis on this third party verification of data, which we think is going to be a really nice extra level of service that we're able to add to our investors. And then on top of that, you're in Vegas. There's just this huge push for publicly traded digital asset trusts. I don't know if that was something that you saw while you were out there. So there's, I must know 15 different entities that are, currently looking to, go public in some way or fashion with like their digital asset trust, whose whole mission is to accumulate, Bitcoin, Ethereum, or some other native asset. And that's going to create a whole new world of investors because a lot of these algorithm strategies can generate profits in the native asset. What I mean is, if you have 100 Bitcoin, we have traders that are doing Bitcoin accumulation strategies. So they're not judging the returns in US dollars. They're judging the returns in how many Bitcoins they get for you. It doesn't matter if it goes up or down, the price of Bitcoin goes up or down. You start the year with 100 Bitcoins, you end the year at 110 Bitcoins. So I think those Bitcoin denominated strategies, Ethereum, Solana, because of the huge rush for treasuries, those strategies are going to be really high demands this year, and probably I don't see that going away anytime soon.
Yeah, that's a really interesting point. We'll see how many more companies pick up these different tokens in terms of accumulation. Obviously, MicroStrategy kind of led the charge, but we'll see where this goes.
Yeah,
really interesting point.
It's going to be frothy, I guess is a good word for it.
Well, cool. I guess I'll end it on a fun note. What advice would you give to an emerging fund manager looking to start today?
Yeah, just do something different. You know, if you came from traditional finance, or if you're just studying algorithms out there, and you have to be really good at math, and you want to give this a shot, you know, my first piece of advice would be to reach out to me. So you can find me on on Telegram, Matt Coop, or you send me an email at m.cooperman@skilltreestrategies.com. But yeah, do something different that no one else in the world is doing. Whether you have a unique data set, or just like a unique blend, or like some really interesting edge of a strategy, that's going to turn a lot of heads from investors.
Awesome. Well, Matt, this has been a lot of fun, man. Really appreciate you joining us, and we'll include all your notes in the show notes as well.